Hello everyone, and welcome to this presentation of adding this one technique to improve your candlestick trading. Now, I really feel confident just by changing one thing within your trading, you'll see improved and more consistent results. For example, if we take a look at this next chart I wanted to share with you, this is in WYN, W-Y-N. I'm going to share with you a simple pattern to look for. In fact, you would have noticed it within these three bars. Had you been able to take advantage of it this past month, you would have been able to capture almost 12 points in just about 3 days. Hopefully you will be able to capture all of it, but anywhere within that 12-point range you would have been able to capture. So this promises to be a great presentation, and welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my presentations, welcome. Just let me first say off that we are all about educating you. We're a little bit different from other presenters or webinars in that our sole purpose is simply to educate you. That's our goal, to mainly give you the information, the techniques, the strategies, the tips that I've accumulated in roughly about 4 decades. Now, I started my trading in roughly 1977, just about 40 years ago. I started on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. If you're not familiar with what a specialist is or does, because there aren't that many around anymore, those were the traders. If you ever looked at the old pictures of the people trading on the floor, making these weird hand signals and lots of paper all over the floor, they were the traders that made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock or issue, you went up to the trader who specialized in that. He was standing behind these booths making these weird hand signals and giving you the markets. So if you wanted to buy or sell, let's say, Waste Management or IBM or US Air, you went to the trader who specialized in it. I did that for 9 years. I traded through the crash of 1987 and the bull market that followed. I've traded in just about every market environment you can think of, and I've traded just about every style, every technique, and method you can think of as well. So I know what works in terms of consistency, and I know what doesn't. In my 40 years of trading, I've accumulated the things that have been consistent and have changed my trading and allowed me to trade for the last 4 decades. So this is what we do at Specialist Trading. About 8 years ago, I teamed up with proprietary strategies, and that's all we do. We educate and mentor our students around the world in over 110 countries and in every state in the United States, the things that I've found to have consistency in trading. These are things that I personally use in my own trading and that I teach and mentor to all of our students. So as you'll see in today's presentation, I'm going to give you some more education so that you can start using as early as today once we've concluded. But before we begin, we're required to show you this first. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results with this one technique you can add to your candlestick trading. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we're required to show you this, so please take a moment to view the disclaimer. And while you're doing that, I would also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there at SPCLST. TRADG. I post new information on a daily basis, anywhere from little bits of wisdom I've accumulated along the way to actual signals that our strategies have generated. In fact, just a couple of weeks ago, I generated, actually, I believe it was a week ago last Thursday, I posted a signal that one of our E-mini strategies generated to go long the markets. And as you can see, the markets have taken off in the last 3 or 4 days. And this was generated prior to this really nice rally in the market. So lots of great information, so feel free to follow us on Twitter. Now that's one announcement. The other announcement I'd like to make is something that's brand new. I've developed with ProTrader Strategies, and this is our new PTS Primo charts. This is a new educational platform that has roughly about 6 or 7 strategies, has all my different tools and techniques, anywhere from the PET D to the buy-sell line, different ways to learn and educate you. So this is one way we try to educate you, and it's all in one-stop shopping. All you have to do is come to the PTS Primo charts, and everything is right there for you, along with 40 years of educational experience. So all my strategies, all my techniques, and everything is located at the new PTS Primo charting platform, teaching traders how to trade. For more information, contact ProTrader Strategies. They can tell you about any deals or discounts that we have currently with the PTS Primo charts. Okay, so once again, we are an educational company. Our sole purpose is simply to educate you. We have no interest in force-feeding you signals. That's not what we do at Specialist Trading and ProTrader Strategies. We have no interest in telling you what the best market is to trade. We have actually no interest in telling you what the perfect time frame is to trade. That's up to you, because everyone has a different time frame, a different market that works best for them. See, if there's one thing I've learned in 40 years of trading, it's that no two traders should ever trade alike. I mean, I know that we've all been taught that, you find someone that's consistent or that's successful and mimic what they do. Well, there's nothing wrong with mimicking their philosophy or their strategies or their techniques, but you should get to the point where you understand what they've done and then go on your own and make your own decisions. See, this is where most traders fall into conflict, is because they feel like, well, I want to take myself out of the game. This guy knows what he's doing, so I'll just copy whatever he does. I'll pay for the monthly fee for a site to tell me what to buy or sell. I'll pay for the chat room that this guy talks about what to buy or sell. And basically what you're telling the markets is, I don't know how to do this. You tell me how to do it. And that's no way to get involved in anything, especially with your hard-earned money. So it's been my experience that the only way one becomes a consistent trader is not by mimicking what someone else is doing. It's by learning from what someone else is doing and then going out on your own. This is our philosophy at Specialist Trading and Pro Trader Strategies. We want to teach you how to trade. We don't want to trade for you. We want to teach you how to trade with the specialist edge. This is the same edge that turned my trading around when I was struggling 40 years ago. And what I really honestly feel has allowed me to continue trading for the past 4 decades. So I try to instill these same concepts and techniques to all of our students around the world. So as you'll see today, our sole ambition is to educate you, not to force feed you signals and not to tell you how to trade, as you'll see in just a few moments. So let's talk about candlestick patterns. Now, one last thing, I'm sorry, I forgot to mention. Since this is a classroom, please hold off on any questions to the very end. I know we're different from other webinars where they like to take questions on every slide. We're a little bit different. I see people are already starting to ask questions, but remember, we're not going to answer any questions until the very end. If you're having technical difficulties, sometimes it works best to log off and then log back on, and things will work well. But don't worry, if you're having difficulties or you have to leave early, all of our presentations are recorded. Contact Pro Trader Strategies and they can send you a link to this recording, okay? All right, so just wait until the very end to ask questions, probably in the next 35, 40 minutes, and then we'll pause for the last portion for any questions. Okay, so we're going to be talking about candlestick patterns today. Extremely important way to trade. I remember when I first started trading in the 70s, no one had ever heard of candlestick patterns. I had to meet with someone who worked at a bank, who worked at a Japanese bank, where they had business with a lot of the Japanese clients who had taught them candlesticks. And this was the newest thing going around, but a lot of people didn't know what they were about. And so one of these traders taught me all of the basic things about candlesticks as well. And there are a number of candlestick patterns. It's going back 40 years ago, no one had ever heard of them. But anywhere now, we can talk about engulfing patterns, haramis, shooting stars, morning stars are all great patterns. They all work in some sense of the, the capacity in which you're using them in. But just to keep things simple today, and just so we can educate you with what we're trying to talk about today, we're just going to focus on one candlestick pattern. And today we're going to be talking about the dojis, okay? Probably the simplest, I would say, out of all the multitudes of candlestick patterns to identify. And the reason is because they look basically like this, like these little crosses. And these are the very common doji patterns. And the easiest way to sum it up is that they open and close at the same price. So if you see here, if you're looking at the standard candle right here, or chart, bar chart, you open roughly at this level. Let me just close here. Excuse me real quick here. I think we just lost the pattern. There we go. Okay, you open and close right here. Okay, so this is opening and closing, opening and closing, opening and closing. So this is basically what happens with this specific chart. What we want to do is give ourselves a little bit more leeway. We're going to have some different parameters to this particular type of doji that we're looking at, because we know that not everything will open and close at the exact same price. So many times, if you're waiting for something to open and close at the same price, you're going to wait around a long time. Sure, you may see that on intraday basis, but if you're looking at actual trades happening, on a daily bar or even a weekly bar, you may have to wait a long time before you find a doji. So we're going to give ourselves a little leeway. We're going to have some different parameters for identifying a doji. So we're going to give ourselves 0.001% of the closing price. So what does this mean? Well, take the closing price of whatever you're looking at. It could be a currency pair. It can be a future. In this case, we're looking at mainly stocks. And let's say we're looking at a $50 stock. What you want to do is simply multiply 50 times 0.001. All right, and that will give you 5 ticks. So that's the leeway we're giving from open to close. We don't have to open or close right at the same price. We can give ourselves a little bit of leeway of closing either 5 ticks above or 5 ticks below that opening price. Okay, obviously we're looking at a $100 stock. We would just multiply 100 times 0.001 and it would come out to 10 ticks. Okay, so you see how that works? We're going to give ourselves that leeway so that we are going to open up the window a little bit to having more examples. Okay, so let's look at the standard DOJI definition. Now, traditional wisdom tells us that a DOJI candlestick pattern is created when the open and closing price are virtually the same. Remember, we just talked about this. Now, this action represents indecision on the sides of both buyers and sellers. But when a DOJI occurs at the top or bottom of a trend, this is usually viewed as a reversal pattern. So if you see a stock or future or currency pair going straight up, and then you see a DOJI, that kind of a cross type of pattern at the very top or near the top, that's basically telling you there's indecision, according to traditional wisdom, and that most likely we're going to reverse. We're going to reverse trends. That's the top of that trend. Now, conversely, if you see a market going straight down in a nice sustained, downtrend, and then you see a DOJI or a multitude of DOJIs at the bottom, that's telling you indecision. Traditional wisdom is telling us we have indecision, and most likely we're going to reverse the trend, and it's a reversal pattern. All right, this is the traditional definition of DOJI patterns. Let's go to the technique that we need to increase our odds for consistency. And this is what I'm going to be sharing with you today. It flies against everything you've ever learned before, everything I learned when I first started trading candlesticks. And that is DOJIs, in fact, all candlestick patterns will have a higher level of consistency if you do the opposite, if you trade them in sync with the trend as opposed to against them. So in other words, we're not going to wait to see if it's a reversal pattern. We're just waiting to see if we find a DOJI, and that more than likely is a continuation pattern, the exact opposite of a reversal pattern. Let me show you what I mean here. This is what usually happens. This is the way I started trading myself. All these charts, by the way, are on the new PTS Primo charting platform. And as you can see here in GWW, we have a nice sustained downward trend, okay? Now, traditional wisdom would tell us that we have some DOJIs here, okay, right at the very bottom of the trend. Now, what is that saying? That's saying that most likely this is a reversal pattern and we want to buy here. Okay, so let's say, well, okay, I've taken my candlestick classes. I bought all the courses, the online courses. I'm all excited. This is probably going to be a big winner. I can't wait. And so you step in and buy, and look what happens. We not only go lower, but we go way lower. We have a nice gap to the downside. And you're thinking, well, maybe you bought options. Perhaps you didn't buy the stock, but you went long the calls. And you say, well, okay, they expired worthless. I didn't really lose that much money, but maybe I get in a little bit too early because after all, here's another DOJI and another one right there. So maybe I've gotten in too early. Maybe right now these are the bottoming patterns. So you buy some more calls or you buy some more stock, and then look what happens. We have one more, okay? So you're all excited. You think we have a nice bounce. We're probably going to fill this gap here, and we go even lower, okay? Look familiar to anybody. This is the way everyone is usually taught about not only DOJIs, but just about every candlestick pattern you can think of. Because candlestick patterns are rooted in reversal patterns. And they will work every once in a while. I'm not going to sit here and tell you that you won't see a great reversal every once at the top or the bottom of a market. But overall, in my 4 decades of trading, it's really been the opposite. I've seen higher levels of consistency if you trade any candlestick pattern in sync with the trend. Now, we're focusing on DOJIs today, but you can apply them to other ones as well. So there are many trending tools you can use. So someone would say, boy, this is great now, so I just have to know how to define the trend. Well, there are many trending tools you can use easily accessible right now at your fingertips. The first ones are indicators. A lot of traders like to use moving averages. Okay, you have a 20-period moving average. That is the standard industry for telling you what the short-term trend is. If it's going down, that's a downtrend. If it's going up, it's an uptrend. Okay. Still, other traders like to use patterns. They like to see higher highs and higher lows tell you that you're in an uptrend. Lower lows and lower highs tell you you're in a downtrend. So they wait for those patterns of those pivots to be formed. And then lastly, a lot of traders say, well, no, I confirm my trend with different time frames. So if my hourly chart is in an uptrend, then my 5-minute chart needs to be in an uptrend as well. That's how I find out I'm really in sync with the trend. Or if my weekly chart is in a downtrend, then my daily chart has to be in a downtrend as well, okay? These are all fine, they're all well and good, and you can start using them if you like. But in my opinion, once again, in my 40 years of trading, they only have a limited amount of consistency. They'll work until they don't work, and sometimes they do very well and very nicely, and other times they don't. So we want to have something that really defines the trend much better than anything we've ever seen. And this is a tool you've heard me speak about before. I use this on a daily basis. I was using this trading prior to this presentation today, and that is the PET-D. It's the best tool I know of for defining the short-term trend. And that's all it is. It's not a strategy. It does not generate signals. All it does is tell you, it translates what the market wants to do. It does not determine what the trend is. It does not tell you how long that trend will stay. It does not tell you how high or how low it will go. It just translates what the market is doing at the moment. Either the market is going up or the market is going down. And that's all you need to know, because our philosophy is to always be in sync with the market. Most traders lose because you're out of sync with the market. You're trying to pick tops and bottoms. You're trying to buy thinking that we're oversold, and we're trying to sell because we're overbought. You're going against what the market is telling you. You'll do much better and you'll be a lot more consistent if you simply be in sync with the market. The trouble is, none of us were never taught that. We don't know how to be in sync with the market. Well, that's what we do with the PTS Primo charts. That's what we do with the PET-D. We teach you how to be in sync with the market. The PET-D is one of the best things we know of for doing that, because it tells you, it translates at the moment what the market wants to do. Now, this is a proprietary tool. When I first was introduced to this on the floor, we had to figure it out, calculations and stuff. But now we've taken all that extra work out for you, and we just made it into a color bar system. So all you do is look for the colors, and there's just two colors, either green or red. If you see a series of green bars, you're in an uptrend. That's all you need to know. If you see a series of red bars, you're in a downtrend. Now, just so that you don't have to take that with a leap of faith, let me show you how consistent this is. Let's show you what the setup is that you'll be looking for once you have the PET-D and you're using it with dojis. Here's the buy setup. Now, we're going to look to buy one tick above a doji pattern that is colored green. Now, remember, this is not a strategy. This is just a buy setup. Okay, in other words, this is a very fertile ground for getting long. It's a great environment. It doesn't mean that it's a full-fledged strategy that comes with a exit point, doesn't come with a stop placement. I know that'll probably be in your questions in the next 20 or 30 minutes, like, Steve, this is great, but where do I get out? Where do I place my exit? Well, those are all in the courses. I'm just giving you one piece of the puzzle right now, which is one of the most important, and it's where to get in. Okay, so if we see a doji that looks like this, what we want to do is apply the PET-D and make sure that this one bar, that's all we have to look for, this one bar is colored green. And if it is, we're going to buy one tick above. If we're looking at currency pairs, it'll be 1 pip above. If we're looking at futures, it'll be 1 tick above as well. That's it, okay? So let's look at this chart in W, okay? Now, we're in an uptrend. Conventional wisdom would say, well, here's a doji here, and here's one here. We should sell. Now, if you would have sold here, well, you had 1 or 2 days of downward movement, but about the end of the week, you're back up making new highs. And here's another doji, okay? So conventional wisdom would say, well, sell this one too and double down, because now they're probably going to go much lower. But now that you know that you have a higher level of consistency, if you trade in sync with the trend, you want to find out, well, are we in a full-fledged uptrend? Well, you simply add the PET-D, and you see that the PET-D told us way back here in March, prior to any movement upwards, we were still going sideways. All the bars were colored green. Even though we were going sideways here, they were green. So the PET-D was already translating that we want to go higher. So don't look for any shorting opportunities. Don't be out of sync with the market the way most traders trade. Most traders will say, well, yeah, but the earnings are going to be terrible. Yeah, but this guy in the trading room doesn't like it, or the guy on TV said it's going lower. Don't listen to those outside sources. Only listen to one thing. That's the chart in front of you, the market. And this is what we do at the PTS Primo charts. We tell you what the market wants to do. Our job is just simply to jump on board. So here's our first buy setup. Here's our second buy setup. And not much really happens after we would have gone long, but if you eventually hold on, see that the PET-D still color every bar green, eventually it kicks in, and it went up 17 points from the first setup, okay? And in fact, there was a really nice gap opening here. We had no idea it was going to gap up in the first week of May. But look what happened. The Pet D was telling us in advance that the market wanted to go higher. Now, what if we want to go short? A lot of people like to buy puts. A lot of traders like to go short the stock. Okay, we're going to do the opposite. We're going to look to sell one tick below a doji pattern that is colored red. Remember, we're not going to look at a ton of patterns or a ton of bars. All we're looking at is one bar. That's this. If we see this one bar here, it needs to be colored red, and that's it. If it's colored red, we're going to go short one tick below. Okay, that's all we're going to do. We're going to sell one pip below. So we see here that we're in a full-fledged downtrend. This is the chart we looked at earlier in GWW. Conventional wisdom would say, boy, this is a great buy signal. You got to buy at the bottom of this. We're probably making for a really nice bottom and going to go back all the way up to these highs here. Let's add the Pet D. The Pet D has been red almost the entire time. So these are not buy signals. These are sell signals. So if you had sold here, look what would have happened. You could have reaped all the advantages and all the benefits of being short. While everyone was looking for a bottom, you could have outsmarted them all. And all you would have been doing is just listening to the market. See, the market is like a river that's going in a direction. Why would you want to swim upstream? Wouldn't that be a very difficult way to enjoy yourself in the river? Wouldn't it be much easier if you just got on an inner tube or raft and went downstream with the river, with the current at your back? For some reason, we've always been taught to do the opposite. We've always been taught to try and pick a top or a bottom. It's a lot easier to just go with the flow of the river. If the river's going lower, as we see here in GWW, then we're going to just go with it. We're going to be a seller. And as we see later on, there were 3 more sell signals, and you could have taken advantage of those as well. Had you taken the very first 3, that's 50 points in your favor from April coming into this week in May. Okay, so let's look at some more examples using the same technique. We're going to show you how simple it is to trade this candlestick pattern, along with any candlestick pattern. We're just going to focus on dojis today, but you can use this with engulfing patterns. You can use this with hammers. You can use this with morning stars. It really doesn't make any difference, just as long as you're in sync with the trend. All right, so we're looking at letter A right here. Someone looking at this would say, well, Steve, no trend at all. You say to trade with a trend. There's no trend here. We're going sideways. We're looking at the month of April. There's no trend. We're in a range. So, I've always been taught, don't do anything in a rangy market. Well, we have 2 dojis right here, and they are within our parameters of that 0.001%. So we still don't know what to do yet because we don't know what the trend is. So all you have to do is apply the Pet D. And we see here that both of these dojis are colored green. So where someone else, not having the information that we have for you as your educator, as your mentor, someone else would say, well, it's not giving me enough information. Someone who's a student of mine would say, it's giving you a ton of information. It's telling you it wants to go higher. Now, people who aren't privy to the things that we teach in specialist trading and pro trader strategy will say, well, how would you know that? It's because we've listened to the market. We don't care about earnings. We don't care about the institutions. We don't care about support resistance levels. If those things work so great and they're used by roughly about 80% of all traders, then why aren't 80% of all traders successful? The statistics are actually the opposite. 80% of all traders usually fail. It's because that there's no consistency in them. So why not get on track with something that's consistent? Now here the market is telling us it wants to go higher. Had you purchased right here, this was coming into May, well, that's 5 points in your favor. Not a lot, but it's not a very expensive stock, and you could have taken advantage of that with a multitude of shares. How about a higher price stock? Okay, let's look at BIIB. All right, now we have actually 2 different things we could have taken advantage of. The first one was right here. We had a doji right here that met our parameters of 0.001. Before we do anything, we have to add the Pet D. We add the Pet D, and all we need to know is the color of this bar. Had we gone long 1 tick above, well, that would have been 15 points in our favor in 2 days. Now remember, we're not telling you where to exit yet. That's in the course. I can't give away all the information. But remember, if you would simply, have a 15-point gain in 2 days, most likely you'd want to exit, if not all, at least a portion of your position. That's a nice little gain in just a couple of days. All right. All right, so now you're looking for the next thing to take advantage of, and what do we have here? Well, we have 2 more dojis that meet our parameters, and they're both colored red. So you're going to switch positions. Now you're going short. You can either short the stock, or I know it's difficult to short stock, so let's say you just want to buy some puts. And coming into this week, 20 points in your favor to the downside. You could have exited with a 5-point gain, a 10-point gain, or a 20-point gain. That's how much room you had to work with. How about win, W-Y-N? We showed this at the beginning of the presentation, how you could have made 12 points in 3 days. Well, here's the DOJI that meets our parameters. And just to make sure, we add the PET D, and we can see well back here that all the bars were green prior to this really nice run-up. You see, this is the way most traders trade. They go, oh boy, look at this big move. I think it's time to buy this stock. There's a lot of buyers, and I'm going to jump in. But the PET D was telling us by translating the market that the market wanted to go higher well back here, just about 15 points lower. So if you wait for what conventional traders use to trade, you're usually late. But if you learn how to listen to the market, which we're never taught to do, but which we do in our courses, then you listen and you know what the market wants to do. And the market tells you usually in advance what it wants to do. In this case, it was telling us almost 2 months in advance it wants to go higher. But using this one setup, we would have entered right here. All right, how about IBM? Okay, this is coming into April. We see here that all the bars are red. Here is a DOJI sell signal. Okay, and we get another one right here. So you could have taken advantage of this, either taken your profits or held on to it. And if you have enough capital, or if you're so inclined, you could have gone short more, because nothing has changed. You know, we're not going to say, well, it looks like we're making a bottom. Here's where the Elliott wave support is. We don't listen to those things. We only listen to the market. And according to the translator, our PET D, it's telling us it still wants to go lower. So there's no reason to cover. There's no reason not to sell. And as you can see, look what happened. Did we know that IBM was going to gap down tremendously on this day a week later? Absolutely not. But the market was telling us it wants to go lower. So that's the only thing we listened to. And then we could have used that. Even if you had not taken these first 2 signals, well, guess what? It generated another one. Now here, most traders would say, Steve, how can I go short? I mean, we've come down so low. Well, I know that would be a little tough to take, but look what happened. It continued to go lower with another gap down. So the market always knows what it wants to do. The reason why traders fail is because we don't listen to the market. It's much more important. We've been taught to listen to some guy in a chat room, or listen to someone on TV, or listen to what the institutions are doing. Remember, those things are a recipe for disaster. When I first started trading, I listened to them as well. I thought, you know, since I had advanced information being on the floor, that I would make tons of money. And guess what? Those things didn't make me any more money than if I had been at home trading out of my home office. All right, let's look at Apple here. Okay, this is coming into the first week of May. Now we're kind of going lower. Now we started to move up, and we're met with 2 dojis right here. All right, they haven't been initiated yet because we haven't traded above either one. But the first step is to identify the doji. The second step is to identify the trend. And as you can see here, the trend changed well back here, well before we started rising up, because the bars turned green. So there's our 2 buy signals. Okay, well, we haven't gotten long yet, and as you can see, you would have gotten long and 10 points coming into the middle of May in just about a week's time. You could have gone long the options, whatever you'd like. All right, let's look at DNB. This is a great example of how it can go both ways. You can get it on the upside and then switch to the downside. As we look here in April, we had a very nice doji colored green, and it was 5 quick points to the upside. Once the color changed in the PET D was translating the market wants to go lower. Here's another doji, and you could have shorted here and a quick 4 points to the downside. Okay. Let's look at the spiders. This is the ETF that represents the S&P 500 index. Now, this is a stock, but you don't have to necessarily buy this stock if you don't want to. This could be used as a great directional tool, or what you think the market's going to be doing, because if the spiders, which represent the S&P 500, are giving a buy signal, then don't you think the market's going to go higher? So this would give you the confidence to maybe buy another stock, or at least buy some options on some index options, okay? As we can see here, we have, this was at the beginning of the year in December, and in January, a couple of dojis on these weekly charts. Obviously, we're in an uptrend. The PET D has been coloring the bars green since November. And so you would have been long here off this first one, and nothing much has happened within the month of December. But in January, you got another buy signal, so you're still long, or knowing that the market's going to go higher. And look what happened. As you can see, coming into May, we've gone up 13 points in the S&P, which represents literally thousands of charts, in thousands of points, I should say, in the spider charts. Now let's look at another market. Let's look at the E-mini futures. Here's a 5-minute time frame of the E-minis, okay, just to show you that this will work in any market, any time frame. We have 3 dojis right here, okay? Now, maybe we are making a bottom because we've been going lower, but for all we know that the PET D is coloring this green and we're making some type of a bottom here. So we have to add the PET D. And, well, the majority of the bars in the PET D are red. And all we're concerned about are the color of the dojis. They meet that 0.001 parameter we talked about. So this is not in any way a bottom. Regardless of what someone says in a chat room, regardless of what your indicators say that it's too oversold, don't listen to those things. Just listen to the market. The market's telling you we're going lower. I want to go lower. So that's all we do. If the current is going one direction, that's the direction we're going to be paddling. So the current of this particular 5-minute time frame says it wants to go lower. You sell, and as you can see, it was a quick 9 points in the next couple of hours or so. Okay, that represents about $4.5, or I should say, $450 per contract. Now let's look at currency pairs. Okay, the dollar yen. This is the dollar yen coming into this past month in May. The PET D was telling us that it wants to go lower, but right here we changed trends and it's saying it wants to go higher. So you're not a seller in the dollar yen anymore. You are a buyer on the daily charts. Now right here you have your doji, and coming into May this past week, 250 pips to the upside. All right, $2,500 per contract. Same thing to the downside. Here's the euro yen. All right, 2 sell signals, both colored red. 450 pips coming into April. It's $4,500 per contract, okay? So it doesn't matter what market, it does not matter what time frame, it does not matter what direction. All our job is as traders is to listen to what the market wants to do. And then once we figure out and listen to what it's telling us, then we just have to jump on board in whatever direction it wants to go. It is not our job to try and pick a top. It is not our job to pick a bottom. And once again, that's a recipe for disaster. I tried doing that, and every once in a while it would work. But the times it didn't work, I not only gave everything back, I lost a lot more money. So it's a lot better to be in sync with the market than opposed to trying to find out when it's going to stop or when it's going to reverse directions. All right, so let's recap before we go to questions and answers here. Remember, only buy or sell doji patterns, and for that matter, any candlestick pattern, that are in sync with the PET D, okay? Because why? Because the PET D is telling you what the market wants to do. And whatever the market wants to do is the trend. So if the market wants to go up, then we're in an uptrend. If the market wants to go down, we're in a downtrend. The problem is that the tools or things we use are usually a day late or a dollar short. We're too late. You know, we're thinking that, you know, we're topping out or we're bottoming out when we're not listening to the market and the market is telling us it wants to go higher or wants to go lower. So only buy or sell doji patterns or candlestick patterns that are in sync with the PET D, because the PET D is the best tool I know of in my 4 decades of trading that tells you, literally tells you what the market wants to do. Now, points to remember, as I stated earlier, this is not a complete strategy. Once I get to the question and answer page, I know I'm going to see a lot. Well, Steve, this is great. Where do I exit? Where do I place my stop? Remember, we did not talk at all about advanced exits. We did not talk about advanced entries. We did not talk about placement for your stops. And we didn't talk about, most importantly, money management. Those are all greatly important pieces of the puzzle, but those are important pieces of the puzzle of a strategy. All we shared with you today is just one piece of the puzzle of a strategy. But here's the good news. We have a great attendee discount and special for all the attendants today. We're going to offer you our candlestick strategy. Strategy number 5, along with the PET D tool. This is called our candlestick combo, okay? You're going to get instant course access, detailed instruction, all the entries, all the exits, and all the stops. So if you're wondering where they are, it's all in the course here. You're going to also be provided with 4 PET D trading techniques, all right? These are techniques that are totally different from the candlestick strategy. So different ways to use and apply the PET D. And this includes both the add-ons. You're going to get an add-on that tells you when a buy or sell a signal is generated for the strategy. You're also going to get the add-on that colors your bars green, okay, or red with the pet D. The most important thing about this is you're going to get mentoring correspondence with someone who uses this in his daily trading. In fact, I've been using this for 40 years. So you're not going to get basically thrown to the wolves and said, good luck. You can be in constant correspondence with me via email to learn how to do this. Now, another thing which I didn't mention is that we're going to provide you with signal alerts or email alerts for a limited time. But remember, these are for educational purposes so that you know what to look for. In other words, it's like giving you the answers to the test in advance so that you know what to look for. And these are educational, and we want you to be able to spot the signals and then check your work via these alerts. For example, on the first, we emailed all our course members these alerts. Now, as you can see, CTSH generated a buy signal on the first for entry for the second, and it was a strategy number 5 buy signal. Now, if we look at the chart right here, these are our PTS charts, we see that, okay, here's our buy signal right here on the first. We would have emailed you the alert at the very close of the day, and you would have entered the next day. Now, once you understand this process, you do not have to wait for the next day. You could enter on the close if you'd like, or prior to the close. But these are just for educational purposes. Now remember, strategy number 5 by itself has a high level of consistency, but when you add the pet D, you increase your odds for consistency even greater. So we want to add the candlestick combo, which is 5 along with the pet D. So let's see if the pet D confirmed this by coloring it green. And so once we do that, we see yes, it did. In fact, roughly the last 5 or 8 bars were all colored green. So the pet D was already signaling it wanted to go higher back here. But here's where all the structure came in using our candlestick combo. And so it gives us the confidence to take this trade on the first, just about 2 or 3 weeks ago. And the stock has taken off, as you can see. So you're going to get all the rules, all of the information, and all the places for entry, such as another entry on the 10th, as well as another one on the 17th. Remember, this is our candlestick combo. This is a great way to trade in sync with candlesticks along with the pet D, okay? Now, lifetime access to both these courses usually runs $29.95. This is just if you want to have one lump payment, okay? What we're doing is offering you a great discount today. We are offering you a discount of $14.95, a one-time fee, and then just $97 per month. But you must call or email, and you must do this really soon because this is a limited time offer, okay? We're cutting the price just about in half, and then you just have to make a small monthly fee of $97 per month. So if you want to get the full-time fee and never have to worry about the price again, price is going up, it's $29.95. Or you can get that special attendee discount. Now, if you combine these two methods and you bought them separately, this would run you close to $5,000. So these are great, great discounts for you to take advantage of. Remember, this also comes with my personal mentoring. So here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. Okay, you can email them at the email address right there in front of you. Best thing would probably be to call them directly to get that discounted package at 310-598-6677. Now, the link you see at the very bottom is the link that will take you to the sign-up page to get that discount. All right, but it's not a live link. If you want a live link, just go to the chat box in the far right-hand corner of the Go to Webinar column. You'll see there's a live link that has been posted. Just click that on. It will automatically take you to the sign-up page. Now, I'm going to leave all this information up here, but I would strongly suggest just calling up Pro Trader Strategies. There's no obligation. Even if you're still thinking and on the fence a little bit about this, that's okay. There's no obligation at all. You can get more information. You can ask some more questions. And if you happen to think of a question after we've concluded today, don't worry. You can call them up and ask them questions about that special offer, okay? All right, so I'm going to open up the question and answer box here as I leave this information up for you. Neil says, when I get a DOJI trade signal, for how long does that continue to be a valid signal before it becomes invalid, assuming the color pattern has not changed? Excuse me, Neil. That's a good question. Basically, he's saying that once one of those setups that I talked about today has been generated, how long, I assume what you're asking is how long do I, watch it or stay with it if it hasn't triggered yet, if I haven't traded above it? Well, remember, we trade strategies and not systems. A system means that you have to follow the same exact rules each and every time. But if you remember, I stated at the beginning of this presentation that it's a recipe for a disaster if two traders trade the same way. No two traders should ever trade the same. So we have about 30% room for discretion involved. So this means that we have rules such as what I shared with you today, but we give you, a little bit of leeway to change those rules to meet your personal risk parameters. So let's say you're the type of trader that likes to trade a lot, okay? And you like to get in and out rather quickly. You don't want to wait around. So what we suggest is to wait for the very next bar. You should be getting in on the next bar. If it doesn't get you in on the next bar, then negate the trade and wait for another setup. Whereas other traders say, listen, I'm willing to wait for a while. I do not have to get in on the next bar. I'm willing to wait a week before we trade either one tick above or one tick below. So all that matters is that you feel comfortable. If you don't feel comfortable waiting around, or if the colors change, a lot of our traders say, hey, listen, I'm waiting for a one tick above, but now the colors have changed to red. Okay, well, maybe you don't want to take that trade anymore. Maybe the Pet D is telling you that the trend has changed. Even if it goes back to green again, maybe you don't want to take that chance. So you don't have to take it. But others will say, no, I've researched this. I've gone back quite a bit, and oftentimes it'll work out okay. So I'll stay in there. Remember, ultimately, the decision is yours. There is no right or wrong way. This is not a system. The only right or wrong way is when you follow rules that someone else trades. We give you about 30% leeway to make yourself feel comfortable. So I hope that answers your question. Roger says, just thinking about how this compares to using the candles closing in the top 25% after a pullback, would it be correct to say that you would use dojis where the market is really strong or weak and therefore is not pulling back or rallying, or can you use the doji on a pullback rally as well? Yeah, Roger, remember, don't overthink this. We don't care if it's a pullback. We don't care if it's going straight up. We're just looking at the doji. That's all that matters, okay? Remember, most traders fail because they get in their own way. You're overthinking and you're listening to rules. All we're trying to do is simply, get you in sync with the market, apply candlesticks that are in sync with the market. Now remember, I share with you a doji technique. The candlesticks can be used with the Pet D regardless. Strategy number 5 does not necessarily incorporate the doji technique. So if you, I see some questions saying, how come the strategy number 5 example was different? It's because strategy 5 is entirely different from what I shared with you today. I'm not going to give you the complete rules to a strategy and then, say, too bad for the people that paid for the strategy. I just gave away all the rules for free. I just shared with you one of the techniques with the dojis today. Strategy number 5 in and of itself is entirely different based on different parameters. It's still in sync with the trend, but there are different things involved about how we enter, where we place our stop, where we exit. Okay, so don't overthink things. Don't place too many rules or limitations saying, should we be in a pullback or does it matter? You now have basically the rules for this entry point. Research it. That's what we want. We want to give this stuff to you so you can become a part of the process. Remember, we don't want to force feed you anything and tell you this is the only way to do it. There are a number of ways to trade these. The only wrong way is when you're trying to mimic someone else's rules. Figure out for yourself what's best. If you like to trade it only in pullbacks, great. If you like to trade it in continuation, great. But there is no right or wrong way, okay? Sam is saying, what happens when a double or triple doji? It doesn't matter. I showed you triple dojis. I showed you double dojis. All we're doing is taking the doji and looking at what color it is. Remember, once again, don't overthink it, okay? All we're looking at is we have a doji. What color is it? Then that's a setup bar. If another one appears, what color is it? That's a setup bar, okay? Let's see, question, what is the $97 per month fee for use your charting package? No, I don't believe it comes with the charting package. I just believe that's basically they discounted it 50%. Actually, they discounted it more than that because if you bought these two programs separately, it would cost you close to $5,000. They've discounted it down to $29.95, so that's a great discount right there. And then they've even discounted it 50% of that discount down to $14.95. Okay, so they're just basically trying to give you a way to get in with a small limited payment on a monthly basis for a small one-time fee. Okay. Does a Pet D work on the Thinkorswim platform or Ninja? It works on Ninja. Just to explain to all you people who have Thinkorswim, the way Thinkorswim is set up, they don't allow a lot of third-party indicators or tools to be applied. They only like to use their means. So that's fine, but what they've done is they said, listen, we'll allow you to use our data feed, and you can use a NinjaTrader platform using that data. We'll split it with you. That's okay. There's no charge. So what we do is, if you have Thinkorswim and they won't allow us to put the PET-D or Strategy 5 on there, they have allowed us to do is use their data. So we give you a free NinjaTrader platform. In fact, our tech support does this for you. It sets up everything free of charge. You have the data that Thinkorswim allows us to use. So you have free data from that. And you can toggle back and forth between the two charts. And on the NinjaTrader, you'll have the PET-D, you'll have the buy and sell signals, and everything will be right there. Now, in my opinion, this is great. It's all done free of charge. But if you want to have something one-stop shopping where you don't have to worry about applying this and getting tech support, where everything is right there for you, I would contact ProTrader Strategies and ask about our new PTS Primo charts, because everything is right there for you. There's nothing you have to do. It's as simple as just clicking on a tab and there's the PET-D, and then clicking on another tab and there's strategy number 5. Everything is right there. So I would ask more about that, about discounts using the candlestick combo we're talking about with the PTS Primo charts. A lot simpler, and everything is right there in front of you, okay? DT is asking, what is the logic behind the DOJI with the PET-D rules? Well, then once again, as we stated in the beginning, DT, candlesticks, the basic traditional wisdom is that candlesticks are used as reversal patterns. All right, once again, the logic I said in the very beginning was, I have found in my 40 years that the candlesticks work better in sync with the trend, okay? So that's the first part of the logic. The second part is, well, what's the best trend tool? And that's where the PET-D comes in. We covered this in the very beginning, so that's the logic. Candlesticks work better with the trend. Second part is, if you want to find the best trending tool, apply the PET-D, okay? Remember, Neil, a lot of people are saying they're confused with the CTSH. That's because you're still thinking that it's based off of a DOJI. The DOJI is something separate. I just showed you a candlestick pattern that works well with the PET-D. Now, if you want to get the full package of applying a specific candlestick strategy, that's what's in strategy number 5. Okay. So once again, I know a lot of people are confused, saying like, well, how come you didn't highlight the DOJI? Because candlestick strategy number 5, although it can be used with DOJIs, is not built around a DOJI. It's entirely different parameters. That's the beauty of it. Okay. And parameters that are, in my opinion, more consistent trading than with a DOJI. Okay. So there's a lot of great stuff in there. You saw the examples, and you saw how these two things work well. You can increase your odds for consistency even more with the candlestick combo. That's with our candlestick strategy, specifically designed with candlestick parameters that are entirely different from what I shared with you today. Along with the PET-D, you get all this included for that discounted price, roughly about 50 or even 60% off of what we would normally charge for this, okay? Now remember, this comes with mentoring correspondence as well. So we're not just giving you this and saying, good luck, I hope you do well. You can contact me for as long as you want. This is not something that ends after a year. You can contact me as long as you're a student of mine, and I have no plans on retiring yet. You can always email me, and I'll answer any questions that you may have. So this is a great, great package. I use this in some capacity every day in my own personal trading, and this is something I've been applying for going on 40 years now. If you really want to take your trading to the next level, come on board, contact ProTrader Strategies, see if you can get that great discounted deal going for the next couple of days. And if you really want to step it up, ask them about our PTS Primo charts, because it's a lot easier and everything is right there for you, okay? In conclusion, I hope you got something out of this today. I really appreciate you coming to listen to me. I hope you learned something about trading with candlesticks, regardless of how you trade. But most importantly, I really hope that you become students of mine in the candlestick combo package that we're presenting today. Thank you very much for attending. I wish you the best of luck. I'll see you next time. Bye-bye.